The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A warm welcome to Squawk Box. I'm Steve Sedgwick with Karen Cho, and these are your headlines. President Trump hands automakers a 1-month reprieve from tariffs on Canada and Mexico, as his administration hints at more potential sector-specific carve-outs. Asian equities tracking Wall Street higher as President Trump's tariff exemption lifts investor sentiment.
Emmanuel Macron says he could extend the country's nuclear protections to cover Europe, as he warns the continent may have to prepare for life without the US by its side.
Peace in Ukraine may or may not be achieved quickly, but the European states, given the Russian threat I've just described to you, must be able to defend themselves better.
Chinese e-commerce giant Alibaba unveils its competitor to DeepSeek, sending shares soaring and pushing the Hang Seng to a new 3-year high.
Morning, Karen. It's been a stunning week, and it's great to have you back here this Thursday as well. Look, chaos. There was a sign held up by several Democrats during Trump's speech a couple of days ago. It said, "This is not normal." And I understand where that politician is coming from, or those politicians are coming from, because you cannot hold negotiations if the policy is changing on a day-by-day basis. Do you know who Flavio Volpe is?
No.
You're not supposed to. I don't know who Flavio Volpe is until I read the FT this morning. Flavio Volpe, Volpe is the head of Canada's Automotive Parts Manufacturers Association. It rings off the tongue. And he says, no one, this is with the 30-day exemptions we just mentioned in the headline, no one can operate under 30-day threat cycles, including especially American business. Evidence of this is in the fact that American businesses have requested this reprieve, not Canada or Mexico as well. The chaos of having policy changing on the hoof day by day is going to destroy confidence, which if you destroy confidence, you destroy investment.
I was reading a line this morning which really gelled with what I've been doing for the last number of days around technology, and that we've got this trade war playing out. It's a historic trade war that Trump is executing here. We've had a huge change, though, internationally. What 1.2 trillion European fiscal bazooka has been thrown in the system. Emergence of China as a tech race leader. So what we're seeing, the upending of global flows as investors now look for somewhere to place their bets other than just the United States. And that was what I was hearing on the ground at a major technology event, where everybody was wondering whether they can have the same reliance on the United States to do business. Now they're looking at other options. They've got this great technology out of DeepSeek and the way it's been adopted. And you've got a lot of European firepower after all these calls for change.
Yes.
So it does feel as though you have cogs moving now, where it's not just a one-way bet. It's almost not the China plus one policy anymore. It's the US plus one that a lot of investors and businesses are now contemplating, which is just ironic given that the whole trade negotiation was primed to make the United States even stronger.
So this isn't Tina, there is no alternative to America, it's TIOA, which just rings off the tongue, doesn't it, TIOA? There is other alternatives. Let's go for Volpe one more time. No one can operate under 30-day threat cycles. Because it's changing again, President Trump has given automakers a 1-month exemption from tariffs on imports from Mexico and Canada. White House Press Secretary Caroline Leavitt said the president had accepted a request from the country's big 3 car manufacturers after a meeting to ensure US firms were not at an economic disadvantage. Did we not think they probably said this to him before he did this, and then he's gone back on the... No? Right, okay, I'm sure someone must have mentioned it. The announcement came after Trump dashed hopes for a broader compromise on tariff policy, saying in a post on Truth Social that Canada had not made enough progress on fentanyl. This is about fentanyl or is it about trade flows? I lose track, quite frankly. Let's have a look at the Asian automakers and where they are currently trading. As we speak, we have inclines for Honda, Nissan, Hyundai. We have a 1% decline for Toyota. The Agriculture Secretary, Brooke Rollins, said the president is considering exempting some agricultural products from the tariffs against Canada and Mexico. Speaking to Bloomberg, Rollins said carve-outs for the sector were to be determined, but that she was hopeful that administration could provide some relief. I've got really bad news for everyone who watches this show and loves Karen and I having our disputes. No, I'm not going. That's not that good news for you. The good news is, bad news is, I completely and utterly agree with you. I think that people are trying to work out where they can park money, where they can invest money with confidence that the rules aren't going to change on a month by month, week by week, day by day basis. Now, the Americans are the most important economy on the planet. We love the American economy and what it has done for the world in the post-1945 environment as well. But if the rules-based system that the Americans designed is breaking down, people will have to find two things. One, alternatives, investments, and two, autarky. Autarky is a word which means substitution. You will substitute your supply chains, you will substitute your investment decisions, you will move employment and labour elsewhere if you just don't know where this roller coaster of a set of policy initiatives are going for the best part of the next 4 years.
We saw it during the first Trump administration. That set the ball in motion, where the very strong arm approach from the US president towards China saw a China plus one strategy starting to emerge. So you saw a lot of businesses re-gear supply chains so they wouldn't be subject to tariffs, and they really played the North American supply chain. But now I think what you're seeing is the opposite, where allies are saying, well, where do we sit in terms of a trade relationship? So I think businesses are saying, well, do we need to proof some of these other markets now as well? And of course, that means dispersion of assets away from the United States. In terms of those trade tariffs, the auto industry has been fascinating because don't forget, it's not a tariff going one way. Some of the parts pass backwards and forwards before the car is completed. So we're talking about multiple different times that tariff can be applied, which is why a carve-out is so essential in this case. What are we going to see from here? Will there be more carve-outs? And that's something that's been debated this morning. How much more could be exempt from the tariffs as well, whether it's Canadian energy imports, crude oil, gasoline, that's agricultural products, something also been discussed.
What
so
you're
how much more will we
pointing
see?
to is chaos.
It's bitsy, isn't it? So you've got to pick your way through industries and
statement,
sectors.
the threat, the delay, the inaction, the carve-outs. No one, not one of you lot are all brilliant out there. Every single one of you that run a business, and I know masses of you, you're on your treadmill, you're on your cross trainer, or you're having your breakfast, you're watching this show. You are amazing men and women. You cannot operate medium to longer term. You can make decisions. That's what you're good at. You're good at making decisions. You cannot operate capital flows into and out of the US with calculated decision based on what we're seeing at the moment. I challenge any one of you in the C-suite who's watching this to disagree with me. Please send in. You know my email address and you know my socials. By all means, disagree. I just don't know how you can do it. And I'll continue asking all of you about this as well. In the meantime, because of the need for autarky, which the Germans finally realised yesterday as well, the Xetra DAX is nailing it week to date. And yet, despite the rally yesterday, the S&P remains 4.5% lower than the DAX week to date so far.
It's funny what happens when you take your foot off the brake, right? You actually see some acceleration, and that's happened in the German stock market. But US markets yesterday were trying to piece together the narrative around tariffs and the carve-outs here, whether that means there is still room for negotiation. So you saw a bounce back across the board. The Dow, the S&P, NASDAQ. Interestingly, it was Microsoft as a stock that was leading all of the major boards higher, the biggest contributor to the three major indices to the upside. Elsewhere on treasuries, there's been a little bit of movement at the long end. I was noting the 10-year. We got to 4.28% in trade on that 10-year yesterday. This morning, we're a little bit higher again. We're 4.31%. So we've drifted up by a good 10 basis points from Friday's close. So there has been some movement. The data is being considered here. We're hearing a lot more about stagflation, don't forget. So as we count down to jobs reports later this week, that could be all important for how this trade unfolds. The dollar in that context, as we see a slight grind higher in some of those yields. Euro dollar this morning, still firmer though, as the market is also looking at those slightly higher German yields as the market prices in more growth anticipated from that economy and the impact across the bloc. So as you can see, euro is showing some strength here. Sterling dragged higher too. We're 129 plus on the level. Dollar is on the back foot versus the Japanese yen and also the Swissy. So it is a weaker greenback picture this morning. WTI, Brent, gold. Let's just take stock of where we're at. Energy was one of the laggards yesterday at a stock level in terms of the price action this morning. We are bouncing higher on both WTI and Brent, 69.5 on the Brent price. Gold prices, as we talk about uncertainty, seeing an elevated level this morning. The Asian markets and Europe. Let's take stock of where we are at. Japanese stocks are moving higher, 0.75%. Hong Kong, much stronger. And again, we're talking about Chinese technology, a contender from Alibaba to DeepSeek, and we've got that market much stronger. Shanghai also in the Kospi in the green. The opening calls, a quick look at Europe this morning on the back of really was a monster day. 3.4% up for German stocks, 2% up for Italian names. We look like we're going to reach even more territory morning session. Operating profit over at Lufthansa came in more than €1 billion lower for 2024, but still managed to beat analyst expectations. As it said, its turnaround program won't reach its full potential this year. But the airline said it expects adjusted EBIT to come in slightly or significantly higher this year. Let's get out to Annetta for more on this. Annetta, just give us a sense of how the airline is tracking and what the demand picture looks like too.
Well, the demand picture actually probably looks quite good. I mean, we have the load factor being roughly between 86 and 88%. So I guess the story is all about, it's a turnaround story, because they had massive service problems in the last years, and on top of that, not enough aircraft. So that is at least the environment Lufthansa was operating in, and that also led to a loss at their core brand, the Lufthansa brand, of 94 million euro last year. But looking into the future, what's more relevant for the stock market, of course, is that they're quite optimistic about this year. They say, as you were pointing out, that EBIT should be significantly higher than last year, and also that the full fruits, so to say, of the turnaround program won't be seen this year, but only by 2028. So it's about cost cutting, improving the service, but also to expand the offerings to customers and to improve the so-called customer experience in order to be able to actually keep prices at the level we are currently seeing. So I'm going to speak to Mr. Spohr, the CEO of Lufthansa, a little bit later here, and we probably will talk about, of course, the offerings, but also the pricing, because clearly pricing needs to be competitive, especially on the destinations to the Middle East and also to North America. For Lufthansa, being headquartered in Germany, one big issue, of course, is regulation as well, coming from Brussels. It makes it less attractive to be an airline based in the Euro area or in Europe than one being based in the Middle East because of all the extra regulatory burden. So that probably is the environment Lufthansa is operating in. But the shares, just one word on the shares, they have been on the rise, 16% since the beginning of the year. Key question is what the market will make out of these numbers. We know pretty soon when the pre-market indication is opening in roughly 15 minutes' time.
Thank you very much indeed for jumping in for that hit as well. Let's get straight out to DHL. Revenues up 3% year on year, but the EBIT down 7.2%, and to cut 8,000 jobs in 2025 at Post and Parcel German division to save more than €1 billion. Tobias Mayer is the CEO of DHL Group and joins us now. Tobias, we always learn something speaking to you. There are so many big issues that Karen and myself want to speak to you about. But first of all, talk us through these numbers. Job cutting, which is always very tough for a CEO. EBIT down 7.2%. Revenue better. Just talk us through it, Tobias.
Yeah, good morning, Steve. We indeed had an interesting year, 2024. It started relatively soft, but we had good growth, especially in the fourth quarter. And I'm very proud that we also delivered great quality in the fourth quarter. So the year 2024 had an upward trajectory, both in terms of revenue and in terms of earnings. And we have launched our strategy 2030 last year in September. And that strategy aims for growth. We want to grow 50% up to 2030, but we also already highlighted an element set up for success with a lean divisional structure. We're adjusting our legal structure, and we also need to work more on efficiency. That's why we've launched a program that we've already worked on, Fit for Growth, to enable us, Steve, to have the financial capacity to continue to invest. Unfortunately, in Germany, we have some structural challenges. We are the universal service provider for the country, which is a closely regulated business, and we have the structural decline in mail, and we have a lot of cost pressure also due to high wage agreements, and that unfortunately led to the circumstances that we have to reduce employment in that division.
Thank you very much indeed for that broad encompassing answer. Let's get straight to the most seismic news I've seen out of Germany in decades. Well, I say decades, certainly in a very long time. And that is the fact that the German government has completely changed, government in waiting, I should say, completely changed its hopes for the kind of spending that the federal state and the individual states will make for Germany to galvanise its activity. How do you read that and what does it mean for you, sir?
Well, I think it will mean a lot of spending on defense, and I think there's broad agreement that that is needed. It will provide further impulse to the economy, the spending that is discussed on infrastructure. I think it's something that, in general, we're looking forward to. What you will hear, Steve, from many of my colleagues is, please don't use that now as an excuse not to work on bureaucracy and efficiency. We need to continue that work in Germany and in Europe to become more competitive, and a higher level of indebtedness and funding through these means cannot take away from the need to really become more competitive again.
Tobias, good morning to you. It's Karen jumping in. I was looking at some of your comments in the statement today around the trade wars and how that impacts supply chains. And I can see there's a couple of lines, no clear shift to domestic activities, which I think is fascinating. But also you're pointing out some fast growing regions as a result of trade lane shifts. Just unpick that for us and explain what is happening in these supply chains thanks to the tariffs.
Well, what we see, Karen, is that trade is astonishingly resilient. And you also see this in the US itself. The de minimis was revoked for 4 days and then it was reinstated because Customs and Border Patrol could not handle these amount of volumes of additional clearances. And that's not only then affecting e-commerce, it's clogging up the entire system. Similarly, in the automotive sector, it was clear parts cross the border multiple times, and it's obviously increasing massively the cost for the American consumer if you apply duties each time a part, a component, a finished product crosses the border. So that's why we have that volatility. For our business, we generally are a strong believer in the benefits of free trade. But if we have such volatility, it's not necessarily bad for a company like DHL. We strive on helping our customers in these type of situation, and it also adds value add in our industry, particularly if you think about the additional customs filings that are needed.
What about the small packages that are going into the United States that are no longer exempt from tariffs? The likes of Temu and Shein have been benefiting from that, but of course now targeted by tariffs as well. Has that impacted volumes, and what can we expect from the likes of Amazon, which is going to be going down the avenue of challenging some of these names too with that cheaper product?
So for our business, we clearly see that the structural trend from stationary retail to online and thereby delivery of more packages at your doorstep, that continues. And the consumer might shift the platform that he's buying from, but that underlying trend is very much intact. And that's important for us because that's our main exposure as it relates to e-commerce, our last mile activities in many countries. Obviously, we currently see a lot of air freight capacity, industry capacity tied up in the trade from China into the US and Europe, and that will shift. We have seen these shifts in the past. Remember several years back when the postal rates were changed, had a severe impact on that trade flow at that time, and we seemingly are in a similar situation now. The abolishment of the de minimis in the US would significantly change that trade. But also Chinese merchants will find ways, for instance, to do local fulfillment in the US. So there will be trade, but it will shift in its pattern.
Tobias, I made a statement before you came live on this that actually it was stunningly difficult for men and women in your position to make investment decisions over the meantime with the chaos, the roller coaster ride of new policy, retractions, exemptions, inaction, delays that we're seeing from the most important economy in the world. Actually, I'd like to know what you think about it at the moment. What do you think that the oscillation in policy is doing to investment decisions?
Well, good question. I think that very much depends on the sector. We do see, and it's very regrettable, uncertainty, for instance, in the production of sustainable aviation fuel now in the US. So that's an area where people think twice. In other parts of the world, that is continuing. For our business, we have several areas where we're very confident that we'll see future growth. Life science and healthcare has structural tailwinds, population getting older, medicine changing, becoming more individualized, more temperature dependent in its handling requirements. So these are areas, Steve, where we focus on, where we do invest. And I think other CEOs look at it similarly. You filter through it and you invest and put the money of the shareholder where there is solid reason and you're not as much impacted by the day-to-day changes in macro politics.
Tobias, there are lines in the release today where you talk about the impact of digitization in terms of accelerating growth and impacting margins. We know there's a ton of tech. I've just come back from a technology event in Barcelona, and there's a lot of DeepSeek, and there is a lot of ChatGPT. How are any of these AI initiatives improving productivity for the business at this stage?
Yeah, that's a very good question, and that's also why we said it's time to put this into a program and really make sure we reap the benefits. Because the technology is there, but in a large company like ours, people like to play around with it, but we obviously need to strive for business outcomes. We need to strive for better labor productivity. We need to strive for easier work for our colleagues, that the technology really helps them in the quality they also can provide to our customers. And that's why we're now turning it a little bit around and saying, in the years to come, this is the outcome that should be achievable with the technology that is available. And let's really strive for that outcome and not only play around with exciting technology.
Tobias, thank you so much for joining us this morning. We do appreciate your time on the back of numbers. Tobias Meyer with us, the CEO of DHL Group. French President Emmanuel Macron opens talks to extend France's nuclear shield across Europe. More details next. And we'll be speaking to the Galderma CEO as the dermatology giant releases 4-year results. That is the first on CNBC at 6:30 London time. Plus, Alibaba shares jump as the company unveils its latest DeepSeek rival. We're going to bring you more analysis later this hour with Daniel Newman, the CEO of Futurum.
French President Emmanuel Macron said he will begin talks with allies about extending France's nuclear umbrella to European partners, saying the continent must face the threat from Russia with or without the United States. The comments by the French president came in response to calls from Germany's Chancellor-in-Waiting Friedrich Merz to discuss nuclear sharing, which is just an extraordinary sea change in a sea of sea changes coming from the Germans at the moment as well. Speaking yesterday evening, Monsieur Macron said the discussions were open, but the decision on using nuclear remains with one person.
Notre dissuasion nucléaire nous protège.
Our nuclear deterrent protects us. It's complete, sovereign and French through and through. Since 1964, it has explicitly played a role in preserving peace and security in Europe. But, in response to the historic appeal of the future German Chancellor, I've decided to open the strategic debate on the protection afforded by our deterrent to our allies on the European continent. Whatever happens, the decision has always been and will remain in the hands of the President of the Republic.
EU leaders will gather in Brussels for an emergency defence-focused summit as the continent looks to step up its own military spending and bolster support for Ukraine. Earlier in the week, the European Commission President Ursula von der Leyen laid out a plan to free up almost 800 billion euros. Look, I'll go back to something that I've oft-stated. There's no doubt about it. The catalyst for all the change we're seeing on these policies at the moment is the 47th President of the United States. But when he was the 45th President of the United States, quite rightly, President Trump absolutely accurately told Europe, as have other presidents, and I'll go back to Obama in a moment as well, as have other presidents have said, Europe needs to take its own defence more seriously. And quite rightly, Donald Trump lambasted Stoltenberg, spoke about Merkel on July 2018 at that breakfast meeting. We ran it live on this show 7 years ago nearly now, where he said, this does not seem right. You take Russian gas, but you take American defence. What the hell's going on here? And Trump, whatever we may say about other policies, and we can talk about Ukraine as a different issue as well, was 100% right. Spin forward to February, March 2025, and finally the penny has dropped for Europe as well. I thoroughly welcome that as well, because he was absolutely right. Why should we rely on US defence 80 plus years after the Second World War?
Let me tackle it from the European perspective and from what Macron is saying. It feels like there's real pride in military these days, because Macron has been fleshing out how efficient the military is, how strong they are in France. I think it was fascinating to hear countries now talk up the merit of their own military. So it feels like a new era where it's incredibly important to show strength through military. What is that going to mean in terms of funding? We've seen it in recent days from a public side, but the private side's also been mentioned here, and the private side is interesting because a ton of money is now flooding into defence assets. How much of that will get behind the European initiative to be stronger in defence? And, a final point here, it must have been somewhat awkward for the Europeans to have to say to Zelensky that peace is going to have to come through the Americans after the big bust up in the White House the other week, that the Europeans really couldn't do very much about it, that you had to have the Americans involved. And you can imagine Macron doesn't want a scenario like that, where he has to say to another world leader that effectively you have to go and apologise. I mean, this was the wash up from that conversation, right? So I think the Europeans very much do want to be in a much more powerful position in future. And there was, I guess, massive disappointment in the way the Afghanistan situation played out now around Ukraine. So I think the Europeans want to have some power back in their own court.
Look, I'll go back to the 1930s, because I'm praying like everyone else in the world that this isn't the 1930s as a prelude to a storm, as Churchill put it, about the events of 1939 onwards as well. We all pray that is not the case, and deterrent will actually act as what it says on the tin. But basically, a lot of people are using 1938 analogies. They're using Czechoslovakia analogies, as it was then as well. They're using the Munich Peace Conference analogies as well. And the criticisms of the appeasement of the 1930s from the likes of Neville Chamberlain and others were being brought up again with the analogies of 1938 compared with 2025. The fact of the matter is, Britain was rearming quite aggressively even by 1938, but unfortunately had nothing that it could offer the Poles, nothing that it could offer the Czechs in order to defend these countries against the scourge of Nazism as well. So some of those criticisms are absolutely well made, but my point being as well, the remilitarization of Western Europe, it's painful, it's expensive, and a lot of things are going to have to go by the wayside, the wayside as well, including the extraordinarily generous welfare budget that we have in the continent, way more than anywhere else in the world. But I'll just give you one statistic. Set of statistics. In 1935, in the United Kingdom, 893 military aircraft were produced. Only 893 in the whole of 1935. By 1939, that figure had reached 7,900, and by 1941, 20,000. Remilitarization is expensive, and it can happen, but it has to be a process as well. And if Europe has to do that, thank goodness for the safety of all of us that the penny has dropped.
You think it'd be a much faster process these days too, and scaling up.
I don't know if it would be, because I think the equipment is much more expensive, and I think it's much more complicated.
Final point though, I think we've heard about a single market in Europe for just about everything. We're talking about single digital services market. Yesterday at Mobile World Congress, I'll be talking about some sort of single nuclear deterrent, as well as France is talking about extending the umbrella. We're talking about single everything in Europe as it looks at itself and what its own capabilities are.
That conversation will have to include the British as well. And how ironic that 9 years after Brexit, it is the threat from, dare I say it, from the United States and from Russia, from both of these superpowers, that is drawing the British back to Europe as well in terms of by the way, this whole conversation about Macron, I think the Europeans can't do it without the British as well, and the British know that and the Europeans know that, and that's a good thing, that actually that will lead to even closer links. Now, whether it's done under the NATO umbrella or not, that I think is the pivotal question, and I will be at the NATO conference in the summer to discuss that.
Which is brilliant. Thank you for listening to Squawk Box Europe Express.
For more market moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.